TDS on commission, etc. on sale of lottery tickets, and this is covered under section 194G. So sometimes what can happen is that the state government or any other person who's running a lottery may appoint various agents who are responsible for selling the tickets of such lotteries. This agent who sells the lottery ticket gets some commission which may be based on the amount of the ticket, or he might be given a ticket at a gross number and the remaining amount might be commission which might be given to him. In addition to this, there could be other forms of commissions also. So let us see what all is covered in section 194G and what amount of TDS is to be deducted and when. So in this particular section, we are going to know which payer are liable to deduct tax under section 194G, who should be the recipient, what are the payments which are covered under this section, what is the minimum threshold below which TDS is not required to be deducted under section 194G, and when is tax required to be deducted, whether at the time of credit or payment or earlier of these two, and what is the rate at which TDS has to be deducted. So like we saw earlier in all the transaction, there's a payer and a recipient who's involved. If the payer is a resident and he makes a payment which is liable for deduction under this section, he has to deduct tax under section 194G. If the payer is a non-resident, even they are liable to deduct TDS under section 194G. The recipient could be a non-resident or a resident. Both are covered for the purpose of deduction of TDS under this section. So what does this section read? It reads as any person means whether a resident or a non-resident, responsible for paying to a person who has been stocking, distributing, purchasing or selling of lottery tickets any amount by way of commission, remuneration or price. So what is the role of a person who's getting the commission? He might be a stockist, he might be a distributor, or he might actually be engaged in purchase and selling of lottery tickets. If for doing either of these three activities, he gets some remuneration or price or commission, then the person who is responsible for paying him such commission, remuneration or price is under an obligation to deduct TDS at the time of credit of such sum to the account of the payee, or at the time of payment thereof in cash or by issue of check or draft, or by any other mode, whichever is earlier. So the tax has to be deducted either at the time of credit or payment, whichever is earlier. And what is the rate at which TDS has to be deducted? Deduct an amount equal to 5%. Right? Let's break this down into various provisions. So which are the payments which are covered under section 194G? The payment which are covered are in respect of stocking, distributing, purchasing or selling of lottery ticket. The payment can be made either by way of commission, remuneration or price. Now what is the minimum threshold and what is the time at which tax has to be deducted? The TDS has to be deducted at applicable rates, which was how much? 5%. If the payment exceeds rupees 15,000 during the financial year. Now the timing of deduction was what we had we had discussed. It has to be at the time of credit or payment, whichever is earlier, right? But the amount which should be involved should be exceeding rupees 15,000 during the financial year. So if the amount is, let's say, 14,000, there is no requirement to deduct TDS. But if it is 16,000, then TDS has to be deducted. Now, if you look at the heading where we are talking about the rate of TDS, the important point is that there is no surcharge or cess which has to be applied where the recipient is a resident. So the rate of TDS is 5% of commission, remuneration or prize money, 20% if the PAN is not provided by the recipient as per section 206 AA, and as per the lower withholding tax certificate which might be obtained by the recipient under section 197. Let's look at some case laws. So for a moment assume that the state government has appointed an agent for selling of lottery tickets, and the state government actually sells the lottery ticket to the agent at a discount. In the case of MS Hamid versus Director of State Lotteries, it was held that if the state government does not pay any commission to the agent but sells the ticket at discount. So instead of saying that there is a ticket of 100 rupees and we are going to give you 10 as commission, if the tickets are actually sold at 90, irrespective of the price at which the agent then sells it, then there is no requirement to deduct TDS under section 194G. Let's look at the next section, which is TDS on commission and brokerage. So commission on lottery tickets is something which is specifically covered under 194G, and therefore when we talk about commission here, that specific commission is not going to get covered. But for other forms of commission and brokerages, section 194H is applicable in respect of deduction of tax. Again, the points you should know when you are looking at any particular payment is which payers are liable to deduct TDS under section 194H, who should be the recipient, what is covered as commission or brokerage, what is the rate of TDS, and the time when TDS has to be deducted. In addition to this, because this is an important topic, it has a lot of controversy, there are a few case laws that we have covered as a part of this exercise. So the payer might be a resident who is other than individual and HUF. They are covered under section 194H. A resident who is an individual or HUF may be covered under certain particular situations which we are going to look at in the next slide. And a non-resident is also covered under section 194H. When we talk about the recipient, it could be a resident who is covered under section 194H. When you talk about the non-resident, they are not covered under 194H, but they are covered for deduction of TDS in respect of commission or brokerage under section 195. 194H is not applicable on non-resident. Now, in case the payer is an individual or HUF, you need to find out whether they were liable to tax audit under section 44AB during the preceding financial year. So if you are talking about financial year 1920, you need to see whether they were liable to tax audit during financial year 1819. If they were liable to tax, then they are under an obligation to deduct TDS under section 194H. But if they were not covered, then they are not liable to deduct TDS under section 194H. What is the meaning of commission or brokerage? Commission or brokerage includes. Now, since this is an inclusive definition, there may be certain other payments which may constitute commission or brokerage, even though they are not specifically covered in this particular slide. Any payment received or receivable directly or indirectly by a person acting on behalf of another person. So the crux of commission or brokerage is that there is one person, let's say A, who is acting as an agent of B. If the A is acting on his own behalf as a principal, then probably the remuneration he gets is not going to get covered under section 194H. But if he is acting on behalf of some other person, if he is representing some other person, then he is going to get covered under this particular section. For services rendered, not being professional services are covered under 194J, and therefore they are not covered here. Or for any services in the course of buying or selling of goods, or in relation to any transaction related to any asset, valuable article or things, not being securities. So if you provide a service which is not in the nature of professional services, and what is professional services? If you remember, legal, medical, engineering, accountancy, all those services which are described under 194J are going to get covered as professional services under that section. They will not be covered here. If you provide any services in the course of buying or selling of goods, those are covered. If you are providing any services in relation to transactions relating to purchase or sale of asset or a valuable article other than securities, even that is covered as commission or brokerage under section 194H. Now what does the section say? The section says that any person other than individual or HUF, they are covered under specific situation, responsible for paying to a resident. If the recipient is a non-resident, this is not applicable. Any income by way of brokerage or commission not being insurance commission referred to in section 194D. Since it's a specific form of commission which is covered under a different section, section 194H is also not applicable on insurance commission. Shall at the time of credit of such account to the account of the payee, or at the time of payment thereof, in cash or by issue of check or by draft or any other mode, whichever is earlier, deduct an amount equal to 5%. So TDS is 5% at the time of credit or payment, whichever is earlier. What are some of the transactions which are not covered under section 194H? Any brokerage or commission which is paid to underwriters for underwriting shares is not covered here. Brokerage and commission on public issue of securities is not covered. Brokerage on stock exchange transactions of securities is not covered. And commission to employee. Commission to employee will be covered as salary in most of the cases and therefore not covered under this section. However, TDS under section 194H shall be applicable on brokerage or commission paid for commodities transaction. So we discussed that it is not applicable on stock exchange transaction, but if it is relating to a commodities transaction, then commission provision are applicable. Which payments are excluded? The payments which are excluded are if the individual or the aggregate commission do not exceed rupees 15,000 during the financial year, then there is no requirement to deduct TDS under section 194H. Commission or brokerage payable by BSNL or MTNL to their public call office franchisees is also exempt or rather excluded under section 194H. When we talk about the rate of TDS under section 194H, 5% is the rate that has to be applied. There is no surcharge or cess on top of this rate which is applicable. 20% if PAN is not available and is per the lower withholding tax certificate under section 197 if any which has been obtained by the recipient. Now, in case of recipient, TDS shall be deducted at the rate of 5% paid or credited, whichever is earlier. We discussed this earlier. There is no TDS which is going to be implied or applied on the amount of GST which is mentioned separately in the invoice. So if, let's say for example in this case, if you look at it, 1 lakh is the commission or brokerage, there's a GST of 18% on it and the total invoice is 1,18,000. TDS will be deducted only on 1 lakh, not on 1,18,000. However, if there is a bill for commission or brokerage of 1,18,000 without specifically mentioning if there is any GST involved in it, then TDS has to be applied on the entire amount. Thank you for watching this video. If you liked this video, you can subscribe to our channel to stay updated on more such videos. You can like these videos and also share it with your friends. And if you're looking for material on this particular subject, you can visit us on our website at www.arinjayacademy.com.